So silver just pushed above $50 this week, and this is it. This is decision time. You need to decide how you're celebrating because there's a right way to go about this. And then there's, I don't know, waking up in a Vegas hotel room hungover with the tiger. Just you, your regrets, and a really big jungle cat. So silver just busted through the clouds this week, peaking over the $50 mark for the first time in 45 years. And that deserves some attention because everything just changed for silver. And look, that's not me trying to work the algorithm. That's a serious statement. I'm not here to give you weird hype. I'm here to tell you about the dynamics behind this run because they're different than anything we've seen in well over a decade. Now, normally we'd say there are two ways to approach gold and silver. You hold long term or you trade for profit. And typically, you get to choose which way you go. Well, silver just hit the point where it's no longer that simple. And before we take that further, quick shout out to channel sponsor Summit Metals. If you're looking to buy gold or silver, they have you covered. And hey, if you're looking to sell, they have you covered there too. They'll take care of you on both sides of the sale. SummitMetals.com. So let's start with the general performance of metals. If we look at this chart from long-term trends, we can see the classic example of gold and silver outperforming the stock market. S&P 500 is shown in red, Dow is in blue, and the black line is a total return index. So that's going to show the maximum potential if you reinvested any distributions, any dividends without tax deductions. We want to keep this fair. Even then, we can see that gold and silver still destroyed those returns. But it's misleading. What the chart doesn't show is how much the starting point matters. When we set the timeline to only show this century, the markets were already in a bubble in 2000 and the metals were in a downturn. So any gains measured from that point are going to be skewed. Now, if we change the timeline to January 1st, 2020 until now, we see that gold and silver are still outperforming the market. We can argue whether we're still slanting the story or not, but we see right here at the end that this chart gets really interesting. We can see silver finally pulling ahead of gold, and that does not happen very often. The last time it did was 14 years ago, and then prior to that, you have to go all the way back to 1980. So this is not common. Now, so far, I doubt that I've surprised anyone. If you've been a silver fan for long, you know that it's been struggling since that big run in 2011. And you've probably also heard the same story over and over that silver is always on the edge of a moonshot. It's a popular story, and to be fair, it does have some merit, at least within a certain scope. Well, that scope is here. Back in December of 2024, I mentioned that I had bought a fair amount of silver again. That was after selling most of what I had in August of 2020, the rest during that May 1st Silver Squeeze 2, I think it was. It didn't amount to much, and I didn't make a whole lot of profit on silver, generally speaking. It was something that I had treated as more than a hobby for over a decade, but if I managed to stay ahead of inflation, well, it was only because I sold during those times when people were willing to pay crazy premiums. Now, the problem for me is that even though I was buying silver when it was relatively cheap back in 2008, 2009, 2010, I didn't get excited about it until the price started to take off in 2011, which means that my average cost ended up being relatively high. And that's something that's probably happening again for a lot of people right now, coming in while it's exciting and coming in while it's expensive. Now, I didn't buy the worst of that 2011 price spike, but my average cost was still pretty high. I could try to fool myself. I could look at the spot price at the time. I could ignore the premiums, do all the things. I could say that I had an average cost under $20. But that wouldn't be true. 2020 was the first point that I could get my capital out of silver without taking a loss. This is not about me, but I think that's important context. This is about silver, what it's about to do and what it will probably go on to do. What's coming next is going to be fun, but what comes after that will probably look a lot like what we've seen before. So two very different stories. So let's take a look at silver's historical performance before and after the preceding fireworks. The fun part of the story is the moonshot. The cautionary tale is the crash that follows. So in 1980, silver ran up 1,000% from its 1976 low of $4 all the way to a peak of $50 an ounce. Then it took a bow and it fell almost 90% over the next 4 years. In 2011, silver ran about 450% from $9 in 2008 to just above $48 an ounce. Then it lost about 70% of its value by 2015, dropping back to around $14 an ounce. And if you're aware of that pattern, then maybe you come at this price rally a certain way. You might aggressively buy into it, but you're also watching for an exit. The last two major rallies led to drops of 70 and 90% respectively. Now, that doesn't mean it's guaranteed to happen again, but it does mean that if you're stacking with the intent of catching a profit moonshot, this is not a long game. You come in and you get out, at least with some part of your holdings. And that means knowing when to get out. But I'm not here to try to call the top, just sticking to the fun part of the story for a minute. I mentioned a few videos back that predictions between $60 and $80 silver aren't crazy, and they're not lazy or wild guesses, because a quick run to 60 would draw attention and momentum, and that kind of trading activity could pile on quickly. That could push price to $80 pretty fast. Now, a slower climb above $50, that doesn't create that same urgency, so it's hard to say how high this rally goes, but we're in the part of it that makes it feel like it's going to go really high. And it's the part of it where we can hear and we can almost believe fantastical stories. The part where everyone is saying, this is the big one. This is the one that's been almost here for 15 years. And that kind of excitement usually points to one thing. You need to buy more and you need to buy fast. And that can be dangerous. So we're going to consider some buying scenarios. I will assume here that anyone excited about the silver rally probably already has some silver stacked up. You probably also have a rough idea of your average cost, and probably you're not factoring in inflation over time unless you're some kind of human calculator, but you probably have at least some kind of starting point. Let's say you have 200 ounces at an average cost of $30. Every ounce that you buy today is going to be $50 plus premium. We'll just call it $55. So if you buy another 100 ounces at $55, your average cost is now $38.33. And if silver rockets to $80 and you continue to buy all the way up, well, your average cost will continue to go up as well. $80, that's just the top of the range that I threw out earlier. That'd be a 350% gain from the $18 price coming into 2020. If you wanted to go higher, knock yourself out. $100 would be a 450% gain. That would be similar to what we saw in 2011. I think there are a lot of different market conditions, but whatever. Now, as I pointed out, silver fell 70% following that 2011 price spike. It fell 90% after the 1980 spike. So remember when I said everything just changed for silver? Well, this part is extremely important. We're on the up curve that could turn into another spike, but you have to consider what happens after. Now, all of this talk is about a spike that hasn't happened yet. We're just going to assume that maybe it will. And we're going to be conservative here. We're going to say if it does, then maybe we see a 60% drop just as a reference point. So if we do see silver spike all the way up to $80 an ounce, that's not a fundamental value gain. That would be something that would be driven by speculative trading. And if it's investor activity that's doing all this, you'd also expect that drop. That's where I came up with that 60% drop for reference. And an $80 an ounce silver price dropping 60% means you'd be left with $32 silver. A $32 silver, that is just me doing some calculations to show what this might mean in real terms. It's the cautionary part of this tale. So if you're like that hypothetical we gave earlier, holding an original 200 ounces at $30, you could just keep on playing the long game and you would still be ahead. But if you were chasing the moonshot, buying the run, you increased your average cost to $38.33 and beyond, and then you played the long game, you held through a price drop, well, now you would have firsthand experience with how most stackers played the 2011 rally and why so many of them were upside down for the next 14 years. Like I said, I think the silver rally is going to be fun, but that isn't how you want to experience it. So let's just scribble this out. This is what a curve could look like, just to illustrate the idea. This is what the 2011 silver rally looked like. And if we're here, you can see there's a lot of room left to run up these gains to take in a bunch of profit. But if you were to just stash it away deep in the safe and hold all the way through, well, now there's a chance that you not only gave up those gains, you actually are now upside down. Now your average cost is higher than the sustained price moving forward. Again, no guarantees here, but this is what we've seen happen historically. Now, personally, I have a little bit of silver that I plan to keep long term. I just like the idea of that. And then I have more that I plan to trade out of when we get closer to what I think might be a top. I'll most likely swap that silver for something else, probably gold, but those are two very different purposes. But the fun part of the rally only applies to the silver that I'm willing to let go of, because you can only profit if you sell. So let's wrap this whole thing up. A lot of people are excited about this rally, and rightfully so, but all that excitement can be split into two groups. One is going to profit and the other is not. So just be aware that this silver rally is going to create some big wins. It's also going to leave at least a few people holding bags. That's just the nature of it. You get to control it, though. The way you approach it decides which side you end up on. Now, it's impossible to call the top. It's impossible to predict the extent of the drop. But the important part is just that you understand that both are in play, because this is the point where it really starts to matter. And let's call it good there. Let us know what you think of the silver rally, how you plan to celebrate. Are you buying into the run? Are you looking to swap for gold at some point? Maybe sell it all to buy your Lamborghini? Maybe you're just playing it cool. Let us know. And then while you're in the comments, be sure to hit that like button if you found any of this interesting. Be sure you're subscribed with notifications turned on if you want to hear more on the topic. And if you're still here, thanks again for watching. I always appreciate your time. Take care.